So today's key macro question is U.S. exceptionalism dead? Our answers are risk assets are increasingly feeling the strain amid increasing fears of stagflation in the U.S. economy. This dynamic is playing out across global markets with the S&P 500 and NASDAQ 100 down over 1% apiece. The semiconductor sector is facing further headwinds as Alibaba's latest model, QWQ32B, outperformed rival models while also materially undercutting them on training and inference costs. Elsewhere, the policy landscape in Europe is evolving rapidly. Incoming German Chancellor Friedrich Merz has vowed to amend the country's constitution to remove fiscal constraints on defense and security spending, a significant shift in EU fiscal policy and German fiscal policy. His proposal includes a sweeping 500 billion euro infrastructure investment plan spread over the next decade. The EU is broadly gearing up for an aggressive financing push, unveiling a euro 500 billion loan program, alongside an additional 650 billion national budget mechanism designed to bolster defensive capabilities without formally breaching budget rules. Investors are swiftly repricing European financial fiscal policy risks, leading to a sharp sell-off in European sovereign debt. Countering the hawkish repricing of European and global bond markets was the 25 basis point rate cut by the ECB today, their sixth reduction since June, which lowers their deposit rate to 2.5%. The ECB statement described its monetary policy stance as meaningfully less restrictive, a signal that they may slow the pace of rate reductions in subsequent meetings. The euro-US dollar cross is up nearly 4% on the week. Volatility is likely to persist as investors assess the ECB's ability to maintain its current easing bias amid expansionary fiscal policy in response to rising geopolitical tensions and shifting policy priorities. A declining US dollar is typically a good thing for global liquidity, but it may not be in the context of 10 plus trillion in global capital flows that have flowed into US assets over the past half decade. A further unwind of crowded positioning associated with the US exceptionalism theme is a market risk in and of itself.